All right. I am going to stream this on Facebook Live. Um, and we're going to go ahead and get the party started. And happy to have those who are here, and especially on this important topic. So mhm, I'm excited about who we have here with Belita. Belita is not only a CPA, but she's a CPA that focused in GovCon accounting space. So as I've said to all of people that have come through my program, you really need someone that understands government accounting. You can't just have Joe accountant um, when you're doing your books in this space. So I am excited. We are live Facebook, but as always, I like to start out with um, housekeeping notes. As you know, we love creating millionaires, but I am now expanding GPI and launching the Government Procurement Academy. And under this academy, we're building out different programs and different opportunities to continue to build people trying to enter in this space and grow their revenues. And some of the things that we are building out is the executive coaching packages. We'll have membership subscriptions. Last week, on the Lunch and Learn, you all heard Stacy Mollison on different types of pricing strategies. So she's going to do a 3-hour mini session at the end of this month on how to uh, do your pricing and when you're submitting bids. I was just speaking with Miss Moody and talking about Monique Carter, who's going to be jumping off a boot camp next week on marketing to corporations. So my goal is to staff up the government on our side. We need all those who have worked in the acquisition space from state, local, corporation, as well as the federal government to come on our side and become a part of the team because we are the only ones that understand the inside operation. So I'm excited about our expansion. I'm excited about these boot camps and those individuals who worked on the inside for those many years, understanding their value and their knowledge, because again, they're the only ones that understand the process. Corporations are different than the federal government. Their opportunities aren't posted as the federal government. So it's all about relationships. So I'm excited about this pilot program and her joining us and you understanding what you're buying is relationships. Can I get an amen? And that's what business is it's about, relationships. Um, those of you, for me, especially now, I felt it was important to bring Dr. Taylor here from California to do a wellness retreat. Jewel did a webinar 2 weeks ago, and she's a motivational speaker. She has all these tools, and she actually walked me through a lot of my journey. And I wanted her to come and try to bring a lot of the small business is women-owned businesses together so that we can excel. Because being a business owner, sometimes you feel isolated and no one understands what it means to be an entrepreneur. So I want a place so that we can all excel. Again, the March cohort for this month will start on March 19th. Please make sure you tell your friends if you participated in the program, share. Let's build a community where we're all working together. And as I discussed, Stacy will be hosting a 3-hour mini session on March the 28th. And we're going to make it all holistic. And today I'm excited as we have a conversation with Belita. I'm excited because so often our community really don't even understand the roles of your accounting department or why you are choosing a specific entity. And it was important for me that we um, have this conversation. Just even me, from a small business owner perspective, and making sure
Turn right onto the ramp to I-285 East.
Making sure that we understand the importance of having a CPA. And I told her I wanted to talk about the different types of entities and why you're choosing it, and helping us to understand the whole purpose of being in business. And you can agree with me, Belita, is the taxes. To me, that's the whole purpose of being in business. But before we get into the conversation, I'd like for you to go ahead and tell us a little bit about yourself and your journey and how you became an accountant. Mhm.
Yes, thank you. And it's such a pleasure to be here. I am so happy to be here to talk about a topic that is so very near and dear to my heart. So I am Belita, owner and CPA of the JB Method. So that is, our firm is located in McDonough, Georgia, but we service companies all over the US. And so my journey, I've been a CPA for close to 20 years now. And my journey started when I was a veteran. I was in the Air Force in my early 20s. And one of the first things I did was sign up for the VITA program, which was like doing taxes for active duty and retired military. And one of the things that I really even learned, just kind of doing taxes for people, was just number one, a lot of people didn't really understand like their income and how it relates to deductions and how it relates to like taxable income and their take-home pay. And then the other thing that I realized is people were not understanding how they could reduce their taxable income as well to save for retirement as well. Like a lot of people were not taking advantage of like TSP program and saving for that. So that's really where my love of finance came from. So growing up, I was raised by a single mom, and it was very, very difficult for us just to make ends meet. So during like my early 20s and kind of being in the military, for me, I really took it up on myself to establish like my own financial foundations to make sure that I was able to save for my future, and then also to be independently, financially independent. And I've done that for myself. So fast forward, I ended up getting out of the military. I only stayed in Air Force veteran for 6 years. And I went into corporate America, where I decided to serve as various roles. I've been in operations roles, I've been in CFO roles, and in my latest role before leaving corporate America, I also helped a international company set up their operations in the US and pretty much expand from being over in Europe and setting up their operations in the US. So I've had the JB Method for about 3 years now, and we specialize in helping government contractors, help them with their contract complexities, help them with compliance, help them with taxation. And then the most important part to me of having a business is minimizing taxes, but we all go into business to make money and to make sure that at the end of the day, when we retire from our business, that our business has done its job and set us up for financial security so that we're not relying off of Social Security, and that we have our nest egg built and we're making sure that we take profits out of our business. So that's the model that my business works with, because as Paula will always say, you are a small business before you are a government contractor. And so one of the reasons I stepped out of corporate America was to bring those tools to the small business and make sure that they have access to capital, make sure that they're staying compliant, and then make sure that they have that profitability that they need for their business.
Oh, thank you. Thank you. And thank you for your service. Um, when I look at small business, and again, I'm going to talk about myself out, and I'm going to be very transparent. From my first business and even now to this current business and servicing small business community, and especially Black communities, we've been trained to manage money differently, right? We've been trained, we don't want to show a profit on our taxes, or for individually, we've been trained, I'm excited to get a refund, especially those who are in underserved community. I had a relative who had 2 children, and she was getting 5,000 back in refunds every year. I was like, don't you think you could use that money throughout the year? But there's a disconnect with taxes and how this tax game works. So when you look at the different entities, I started out as a LLC in that first business in the 90s. Nobody even heard of the LLCs. Um, but as we grew that business, we started making money. And an accountant said, well, you all need to become a C corporation, which became a nightmare for me because I had to novate all these contracts that I had under the LLC. I didn't know what the domino effect was. So can you first educate everyone on the benefits and the differentiator between the entities and why one would choose one over the other?
Yes, absolutely. And to go back, even to your point of just talking about, the financial foundation that a lot of small businesses don't have. And that's one of the things that I really work with clients with, is on educating them about their financial statements, because a lot of us are first generation business owners, first generation millionaires, or on our way to being millionaires, and we did not grow up with those role models to teach us and to ingrain those skills in us. It's not really taught in school. And so that is one of the big pieces that I help businesses with, is on that education piece of it. So when it comes to the structure of your business, you have to think about it almost in 2 buckets. So you have the legal entity structure of your business, which is going to be an LLC. Depending on, every state has different types of legal entity structures that you can set up. So you can have an LLC, you can have a corporation, you can be a disregard entity that just operates as a sole proprietorship. And then there's also partnerships. So those are some examples of legal entities. So when it comes to the tax portion of that, no matter what type of legal entity you are, you can choose how you would like to be taxed as a business. So even if you are a C corporation, for a legal perspective, you can choose to be taxed as an S corporation. And so when it comes to taxation, typically, if you are a solo person that's just starting out your business and you're an LLC, my recommendation is to be a disregarded entity. Typically, when you start getting up to profitability around $50,000 to $100,000 is when you want to start looking at an S corp. A lot of times I see small business owners, just because they've been on like YouTube or been on LinkedIn, and they just elect the S corporation because they think that that's going to automatically save them taxes. but you can actually end up costing yourself more money by electing an S corporation too early. So that $50,000 to $100,000 mark is typically where you want to be looking at when you're thinking about starting an S corporation. So
And the reason for that is because of, I think, under that amount, you're taxed with the self-employment tax, which is higher. And when you're talking about a disregarded entity, you might want to elaborate. That's the tax language
yes.
of what that actually means.
Yeah, so if you are a disregard entity, that means essentially you're filing on a Schedule C. So all of the profit from your business is going to be taxable income to you. So if you have a revenue of $100,000 and your expenses were $50,000, then you're going to be taxed on $50,000 and you're going to pay self-employment taxes on $50,000.
Okay.
So
But if you were S using that same scenario, what would be the differentiator?
So when you start to reach that $50,000 to $100,000 in profit, that's when you typically want to start thinking about becoming an S corporation. And so one of the benefits that the S corporation gives you is it separates you as a person and a worker in your business from you being an owner. So now you're going to have income from two buckets. You're going to have income from a W-2. So as when you go to an S corp, you will be on a W-2. And you're going to be paying self-employment taxes on the W-2 portion of your income that your business issues to you as an individual. So depending on, you work with your CPA, and depending on what they say is a reasonable compensation for you, that's the portion of the income that goes onto your W-2, your personal tax return. And then all of the rest of the profit that you have, so taking this same example of having revenue of $100,000 and profitability of $50,000, let's say you paid yourself $25,000 in wages. So that $25,000 is going to go onto a W-2. And then now you have an additional $25,000 that's just going to be an owner's distribution to you. That's going to be your profit piece of it, but you're not going to be paying the self-employment taxes on that because that is not earned income to you. That is income from you being the owner of a business and expecting to have a return on your investment.
Okay, that's a lot for my brain. That's not a math person. So when I look at that 25,000, that's the profit of the business. You're not going to be taxed on that 25,000 making, if my income was 25,000 as a W-2, does that 25,000 that I made in the business now make my taxable income $50,000 because of the profit?
Yes, your taxable income will still be $50,000, but you're only going to be paying the self-employment taxes on $25,000. So that other $25,000 in profit that you have, you will be saving essentially 15 to 16% on that, depending on your state and federal income tax bracket.
Are y'all still with me? Y'all can jump in
Yeah,
if y'all have some extra question in this, because again, I'm trying to calculate, as you all are in my class trying to calculate what I'm teaching, this accounting, and even been in this game this long. Okay, so for me, I went from LLC, I started out as a LLC. 4 years later, I became a disregarded entity under the LLC as a S corporation and began getting income as a W-2 employee. And for me, that worked because it kind of forced me to to become a W-2 and pay the taxes. Because starting out, it's hard to do those estimated taxes, especially when you're just trying to trying to make ends meet. You know what I mean? So it's kind of hard to do that. But I like the discipline of it. Now under the S1120, I'm now 1120S instead of following the Schedule C. The Schedule C is when you are a LLC without that disregarded entity or being approved as a disregarded entity, right?
So the being on the Schedule C, that is considered a disregarded entity. So a disregarded entity means you do not have a separate identity with the federal government. So once you establish yourself as an S corp or as a C corp, that's when you become I guess you can call it a regarded entity for federal tax purposes, and you'll have a whole different business tax form that you have to fill out that's not on your 1040.
Because I found like when you're trying to get loans, if you don't have that, you're giving them everything, your personal, your 1040 and that Schedule C. But if I'm trying to file a loan just for the business, I don't necessarily have to give them the 1040. They can just look at my business tax return.
Exactly. Yep. That is another benefit of having the two being separate, because once you set up yourself as a separate entity from your business, then now your business has its own financials and you have your own set of financials, your personal financials. So that is where it comes to separating your business and personal finances. Whereas when you're on a Schedule C and you're a sole proprietor, then the government is looking at, well, lenders will be seeing all of like your business income and your personal income on one tax return.
And again, so often because it's tax returns, we just give our information to whoever's preparing our taxes. And for me personally, I just want to share what has happened to me and why I'm like, oh, you're exactly who I need. With Magda, I'll get back with you just quickly. I see you have your hands raised. I had a bookkeeper who was doing and reconciling my QuickBooks and doing my tax returns. The bookkeeper was also, I guess, qualified as a tax preparer. She also indicated she used to work with the IRS. And so what has happened with me personally, she wasn't paying attention to the details. So that LLC that I was following under, I ended up dissolving the LLC and creating a new LLC. And so when I converted to the S corporation, she continued to file my taxes under an entity that was dissolved. And now IRS is coming after me on the entity that was dissolved and saying I'm owing taxes. And so when I started going back and looking at when it adjusted or when the change happened or wasn't recorded properly, that's 4 or 5 years. So often we choose HR block or all these entities personally and business to do our tax returns. And because it's we think a cheaper way. So for me, you're either going to pay now or later. And that's where I am. Because now, because of this one person's mistakes with my tax returns, now it's going to cost me more to go back and amend all those tax returns that I potentially might now even owe or the IRS owe me. And that's how our attitude is with taxes, is that we give it to the whoever's doing our taxes and they come back and tell us we either owe or we don't. So we can no longer operate that way. we need to understand and read our taxes and have somebody to explain to you your tax returns. My experience is everybody wait at the last minute, the day before your tax returns, and give you the bad news or the good news, and you don't really have time to look at it. So, can you explain the differentiators between the tax preparers, the roles and the people that small businesses should have as it relates to their business, and who should be doing what, and why we need a CPA? What's the difference?
Yeah. Yes, that's a loaded question and that's a bit to unpack. So I'm gonna step back for a second just to kind of put an overview on it. So for the time to have a tax professional is not when it's time to file your taxes. So that's number one. Like typically when business, like if it's your first or second year in business and you have not gotten that big bill yet, or maybe you're just scared because you think, hey, I have not been paying my taxes all year and I'm going to potentially owe. That is where having that relationship with your CPA at the beginning of the year, so that way you can plan your income, plan your expenses, plan your tax strategies for the year. How are you going to reduce your taxable income? Because once December 31st hits, it's closed. We cannot, there's very limited planning that we can do to save you taxes if you didn't do it during the year. And then also there may be activities that you did in your business, whereas if your CPA or tax preparer would have known that up front, they could have helped you to structure that transaction in a way to be more tax favorable. So typically, I would say at the beginning of the year or shortly after tax season, usually around May is when our firm starts reaching out to start planning with our existing clients for their upcoming year. So that's the first piece of it, is do not wait until tax time to start that relationship with your tax professional, because if you do that, you're just going to be getting a bill at the end of the year. And they can also help you to prepare your estimated taxes. So now to come to the second piece of it and breaking down the relationships between these tax professionals. So you have the first critical role that's going to be needed for your business is what's called a bookkeeper. So some CPAs will also serve as a bookkeeper. We do bookkeeping services at our business, but that person is essentially categorizing all of your transactions through the year, making sure that your income and expenses go where they need to go on your profit and loss statement, and then also making sure that your assets and liabilities and equity is properly counted for on your balance sheet. So that financial statement and how it looks is very key to your tax professional being able to properly put together a tax return for your business at the end of the year. Typically, bookkeepers are not qualified on their own to do tax returns, because when it comes to doing a tax return, there's different laws and regulations. There's compliance with the IRS. There's also different credits and things that you have to be very familiar with the tax law in order to take advantage of. And then you also have to know if there are things that need to be moved around on that financial statement for tax purposes. And so when it comes to choosing a tax preparer at the end of the year, you have a few choices. So the first level of tax is really just a tax preparer. And to become a tax preparer, all you have to do is apply for a P10. And a P10 is a identification number that recognizes you as being allowed to process tax returns. There's not any training requirements. There used to be, there's not anymore. So essentially anybody can really just come off the street, apply for a P10 and do your taxes with no training whatsoever. So it's very important to make sure that the person that you're working with is credentialed in some way, which I'll get to the credentials in a few seconds, or to make sure that they have like an extensive experience preparing tax returns. So the second type of tax preparer that you have is what's called an enrolled agent. So an enrolled agent is somebody that is it's a designation by the IRS that allows, they go through it's a certification process, much like the CPA, but the sole focus on it is tax. And they have to go through a certification process, a testing process, just like a CPA. They have continuing education requirements that they have to adhere to. And they are also able to get your tax records, correspond directly on your behalf with the IRS. Whereas if you just have a tax preparer, they cannot even call the IRS to get you an answer. You have to have an enrolled agent or a CPA to be able to do that for you. So that's an enrolled agent. And then you have a CPA. So a CPA is also a more generalized certification. So CPAs, also a certification, but they have different areas of specialty. So they can some CPAs do estate tax planning. That's all they do. Some CPAs do CFO type work. Some CPAs do audit. So it really just depends on the specialty that they choose. But the important thing about having a CPA is that they do have that breadth of experience, and they do have an extensive testing process that they have to go through. They also have continuing education requirements. CPAs are licensed by the individual states, whereas the EA is licensed by the IRS. And so you have to have a CPA in the state that you're operating out of. And the CPA is also able to call the IRS on your behalf, help you with resolution, as well as kind of help you with your overall broad financial planning, whereas the EA is going to be just focused on tax.
And you have to have that kind of background, because again, most of us start a business on our skill sets, and we don't necessarily think of the planning. We just come up with a price. That sounds good. I'm gonna make $50 off of it. Okay, but not really looking at the totality of the whole business and where you're trying to go and grow. Matt, I don't want to mispronounce your name, Miss Abdul Kareem. I'm just gonna go with your last name. You had a question.
Thank you, Miss Paula. It's Majida. First
Majida.
of all, thank you, Miss Paula, and thank you, Belita, because this is a lot of great information. But I did have a question. In regards to the sole proprietorship versus the single member LLC designation, what is the difference? And if you're a small business, say for instance, starting out, which one should you go to? I know LLC has more protection. And yeah, that's that basic question. I don't want to over consume with questions, but I do have a lot of them. So that one, the single proprietor versus the single member LLC, are those specific tax designations with the IRS for small businesses? Which one should one go with and why?
Yes. So LLC, that is a legal term that does not even exist as a tax status. So with an LLC, that is organized under the state that you're in. And so that has to do with liability protection. When you're formed as an LLC, it is a single member LLC only, you have the option to be taxed as an S corp, or you have the option to be taxed as a sole proprietor. So depending on what you check on that W-9 box, on how you want to be taxed, that is what's going to choose whether you need to do a Schedule C or whether you need to do an 1120S, which is an S corporation tax status. So it's not about the LLC or the sole proprietor. It's about how you choose to be taxed, which LLC is not a box, not a tax status.
Thank you. I'm clear.
Go ahead.
My tax preparer did something for me along those lines, but I didn't understand the why. So thank you for breaking down the why. I was like, why? So
Yes, you're welcome.
And it's so complicated, but it's not. And again, us understanding how to play this game and how to minimize our tax liability as opposed to waiting to get your taxes and paying the bill. I think we need a lot more structure and understanding how this game is played. Um, and not being fearful of the IRS. I think, we come to you in an emergency, but because we're afraid of the IRS. And from a personal experience in that first business, I owed almost $250,000
Mm.
in payroll taxes to the IRS. And that was because I had an attorney when I knew I had to close the first business. And I told him, I need you to pay. I gave him $200,000. I knew I was going to declare bankruptcy and I knew I could not.
Miss Paula, you went on mute.
Yeah, I knew I couldn't bankrupt my taxes and I told him to pay my taxes. He didn't. 6 years later, IRS is coming after me and sending me all of these notes. They like the mafia. I was getting 10, 12 collection notices. You owe, you owe, you owe.
Yep.
But I ended up getting to the right person, the revenue officer, and I told her my story. I had all my evidence, and she declared it uncollectible. I never heard of that. So for me, the IRS is not to be afraid of. They just want you to pay your bills. Don't ignore them. They do payment plans. I've been on lots of payment plans. So how can you help our community to change our thought process? And I'm always amazed that people don't even file taxes a lot in our community. Um, I talk to people all the time. I haven't filed taxes in 5 years. Now that makes me afraid. So, what's your experience with that?
Yes, all too often. So I think this goes back to the beginning of the conversation when it talks about when you're starting that business and you're just trying to save money at that point. And so what I find is that a lot of clients will come to me and then they hear the price of what it's going to cost to have their tax preparation done or how much their tax bill is going to be, and you ask them to sign off on their return and you never hear from them again. So number one, I will say that working, if you go and then people end up at the H&R Block where you're paying $200 to do a tax return, but then you're costing yourself tens of thousands of dollars down the line. Whereas you working with a CPA, you're going to see, hey, maybe my bill is close to $1,000 or up, depending on what the activity in your business. But once again, if you come to that CPA at the beginning of the year, they're going to be saving you 3 times what you pay them as far as their preparation fee. So those are some of the things to just think about, is that tax planning and tax savings. Your CPA should be working with you to make sure that whatever they're charging you, your tax savings should be equaling more than what you're paying. In most situations, of course, unless you're taking a loss on your business at those beginning years. But the number one thing is do not be afraid to pay for tax advice from a good person, because that's going to save you money in the long run. Yeah, it might be some upfront costs, but you're going to be setting up your bookkeeping correctly. You're going to be setting up your financial stability of your company, and they're going to be able to give you insights on what you can do to improve the profitability of your company. And then they'll also help you with tax tips as well. And then if there's estimated payments that you do need to make, they'll help you to be able to set those things up as well. The absolute worst thing you can do is to not file your taxes and to not file your extensions. Because what happens is, it's numerous times I've had clients come to me with like 3 years of tax returns that's done. And what happens to that $1,000 bill that you did not pay or get on a payment plan for? Now you have 25% tax penalties on top of it. And the interest has been building and building and building. So now the penalties on your tax bill is more than what your tax bill was at the beginning. And as Paula was saying, it's very easy to get set up on a payment plan if you need to. So just, do not be afraid to confront the problems that you just try to hide somewhere. They're gonna grow bigger and they have the potential to put you on your back financially. So don't run from those things. The other thing that's very important about filing tax returns as a business owner is the self-employment taxes that we were talking about on that Schedule C, right? So especially if you are new in business and you're not filing a tax return, you're not paying into Social Security. You're not paying into your retirement. So now when you go to pull your Social Security statements and your earnings history, all of that stuff is showing zero. When you need funding for your business and they go to pull your tax returns, now all your tax returns for those years are missing. So it's also going to be very difficult for you to get any loans, whether it be personal or business. So always keep your tax house in order and don't run from it. There's so many options to get that stuff taken care of, whether it's a payment plan or just to get it alleviated. And most of the times, it's not even as bad as people think it's gonna be.
Mm. I do have a couple of questions in the chat. Dr. D, she said, please walk us through the ideal steps if we are just starting a business. For example, initially before profiting, we should be set up as a LLC. Then how do we shift and when? And the second part is year one in business, where we should be working with a bookkeeper. And then when do we expand our accounting consultation if we have experienced significant revenue increases?
Yeah, that's a really great question. So the first thing that you want to do, of course, if you are just setting up your business, you want to make sure that you get registered with your Secretary of State. You want to make sure that you have all of your business filings, and you want to make sure that you have your EIN number. If you are planning, at that point, you probably don't have employees, but if you do have employees, you also want to make sure that you have those payroll tax accounts set up. If you're going to be selling goods like products, then you're also going to need a sales tax number. So there is a whole list of just agencies that you need to register with when starting a business. So that is a great time to just sit down and start a relationship with the CPA. To me, there's not really a trade-off between when you should have a CPA and when you should have a bookkeeper. You need both. You probably won't be meeting with your CPA every single month. You probably will only need to meet with them like twice a year, once in the middle of the year, and then once at the end of the year when you're doing your tax planning, and maybe like a few phone calls in between. But the CPA is going to be the one to make sure that you have all of your tax documents set up so that you're operating in compliance with both your state, local, and federal guidelines. And so,
yeah, I'm gonna interrupt you. And I think for me, understanding the difference with the bookkeeper, I've always had a bookkeeper from the beginning. Yes, I want to now have a CPA, and oftentimes they will offer the bookkeeping services just for easier transition. But the bookkeeper is the one that's reconciling every month my income and my expenses and making sure everything is correct in the system. That the CPA comes in again to do the periodic checks. But for me, it's still, and no offense to the CPA, you still as the business owner need to be checking and understanding what the CPA is doing. We can no longer just give our stuff away and hope and pray that they're doing the right things. And that's where so often we get into trouble or we're owing and spending out so much more money than necessary. Um, I hope that answers your question, Dr. D. I did want to spend a little time before I get to Majita's last question um, on this government accounting um, systems and understanding GovCon. For me, being up in DC in that space, that was the hardest position for me to find. I learned government accounting on the job. I had no idea that your government accounting system had to be set up in a certain way to capture the information as you are competing on contracts, because that's going to determine your profit and loss on those contracts. So you have to make sure your system is set up properly so that when you are competing on these contracts, you understand where your margins are or where certain expenses need to be. I went through an audit after I closed the business. And again, not understanding what they were looking for. But what they were looking at is my accounting system. How much did I bill the government in those cost pools that are identified by the government? And fortunately, those pools are going to be updated each year based on the activity of the business. And fortunately, I could have owed the government money because I overbilled them in those cost pools, or they could have owed me. And they ended up owing me and giving me an $85,000 check at the end. So it's key and critical that you have somebody of your caliber to be your partner. They're just as much important in the business as anybody else, as your attorney. You all are the heart. So can you help people to understand the difference? And I get this question all the time. I'm doing over here in commercial business. Do I need a separate accounting system when I'm coming into the government accounting space? Can you elaborate?
Yeah, that's a really good point. So just to answer that question very directly, no, you do not need a separate system for your government accounting versus your business accounting versus your taxes. Like one system, that's what you need. And your system should be set up to accommodate the requirements of the government. And so when we say government here, just to make sure we're talking about federal government, because states, they also have their own way of operating. And then it also depends on the type of contract that you are awarded as well. But typically when you're setting up your accounting system, you want to make sure that you have it set up so that you have your direct expenses. And then you want to make sure that you have your overhead expenses. And then you want to make sure that you have your SG&A expenses separated into and that you have your chart of accounts set up that way. You also, when you have different projects, and this is where having a really, really good bookkeeper or having a really good accountant comes into play, because for a lot of small businesses, not all of their business is with the government. So you want to make sure that you have a way to track what is being spent on each of your projects, that you have a way to categorize the revenue and expenses and relate them to each other. So you want to have a way to relate your revenue and your costs so that you can pull reports on those and see the profitability of each of your individual projects. And then, you may have some other revenue that's just coming in, from courses or whatever you do. And then you are going to have your overall company profitability as well. So the key to that is really just setting up your financial system so that it could track all of the different projects that you're working on, all of the lines of business that you have. And then you want it set up so that you can look at everything holistically to say, yes, I've made money on this project. Maybe I lost a little bit of money on this project, but overall, this is how my company did. This is how I did with the government. This is how I did with this line of business. And so there are different ways that you will be able to look at your accounting system depending on how it's set up. So that is where it comes to, am I still in the bookkeeping space, or at this point, do I need what's called a financial officer to help me really set this thing up right? Because you can outgrow just having a basic bookkeeper depending on what you're doing.
And I just remembered in that first business, we won the contract. They gave us 6 months to get our accounting system approved. And what that means, that's a pre-audit, meaning they want to make sure that your accounting system is set up to capture the costs that you're going to be billing back to the government. And then as we continue to grow, some of the agencies were heavily pressuring us to convert to Deltek, which is a government accounting system, and they can't force you to use government Deltek because QuickBooks can do the same thing. The accounting system to me is just as good as who's putting the information in. And Deltek was very expensive for me as a small business. I wished I'd stayed with QuickBooks. That would have saved me a whole lot more money. Do you have any, are there any other type of software packages that can accommodate if you're going into this government contracting space?
Yeah, I mean, honestly, almost any accounting system can probably accommodate that. The biggest piece of it is going to be on your payroll system. That's where a lot of companies kind of get caught up, because you're going to have, to Paula's point, you can have direct labor, and then you can have that indirect labor as well. So if you have employees or contractors that are working on a particular project, then you want to make sure that you have a time system that ties very closely into your accounting system, so that you can make sure you track the hours that people are working on the project, even including yourself as an owner, which are going to be your direct costs versus those indirect costs that maybe you just have a marketing person that's supporting everything, but it's not directly related to a government contract. You want to make sure that your time system can report those things separately. And then there's also stringent requirements around that timekeeping system to make sure that it is protected and to make sure that the data cannot be manipulated. But once again, almost any, you just don't want to be doing it on a spreadsheet. But most systems today, accounting systems today, can accommodate that. So for small businesses, aside from QBO, there is one that's called Xero that's out there that a lot of people are starting to use. Some people don't like QBO, so they use Xero, and that's spelled Xero, I believe. And then, yeah, that's just another small one that people use before they start moving on to like some of the ERP systems.
Big question. I'm starting out. When do I determine I can take money, start paying myself, number one. And number two, which just you really helped to clarify me in reading my own personal taxes. My last tax preparer placed the equity that I had on my business on my tax return as personal revenue. Or the losses, I had some losses, but they were counting it as revenue and I was being, well, no, let me back up. I took out some money as a distribution, right? They were counting the money that I've taken out as a distribution as income. So you helped to clarify me that just because I took it out as a distribution, that's not necessarily taxable income. Can you explain that scenario? Because no one has ever even said that to me. You can take money out of the company if the company's making money. You can't take it out if that's the difference, right?
Yes, I mean, so as a business owner, when we're talking about when you can start taking money out of your company, I will say, and this is just the way that I work with my clients from day one. From day one, if you are making $1,000, you should at least be able to take $100 out of your business. So from day one, if you are not setting up your business to be profitable, you're headed in a very terrible direction. So that's number one is always make sure that you have some type of budget for what your revenue and expenses are expected to be and kind of like how you plan to make a living off of your business. Now, granted, in the first 2 years, you probably are going to have different startup costs and things like that that have to be considered separately outside of your normal operations. But when it comes to your normal operations, you should be having a way to take money out of your business. Now, that is completely different animal than how you are being taxed on your income and expenses. So once again, kind of going back to that example, your profit and loss statement is going to be the key to your taxation. And that doesn't matter if you're a Schedule C or whether you are operating as an S corp. What's showing at the bottom of that profit and loss statement as far as like income, that's what you're going to be taxed on. If you have W-2 income, then you're also you think of yourself as like a person that's receiving the W-2 form from any other employer. It's going to go onto your tax return. Now, let's say you had a really good year and you only paid yourself a $60,000 salary, but maybe your business made $100,000 for that year in profit. You're going to pay taxes on $100,000 that year, whether you take out $80,000 of profit or whether you take out $0 in your company, you're still going to pay taxes on the profit that your company made.
So can I shift some of that $100,000 profit to offset that tax liability to somewhere else?
Depending on your holistic financial situation, there is a possibility to do that. But generally, if you only have one business, then that's when we start looking for deductions and we start looking for tax planning opportunities to reduce your bill.
And as a small business owner, should we be looking at setting up IRAs or CDs? Because again, we still want to plan for some sort of retirement.
Absolutely. One of the most powerful things that you can do as a small business owner from day one is to set up a self-employed retirement account, whether that be a SEP, whether it be a 401k, find some type of retirement vehicle to set up for your business. And even if it's 1% or a dollar amount, start putting that money aside for retirement, because that is deductible money that you can deduct from the profitability of your business to do tax savings. And right now it's like close to $70,000 that you can put into one of those things every single year.
Wow.
I will say that is also another thing that you want to talk with the CPA about before you set up one of those plans, because they do have different percentages of income that you can contribute to them. And so you want to make sure that you have one that's set up that's going to be right for your tax situation.
And we have one last question here from Ms. Long. It says, do you pay two different taxes on that 60K you pay yourself? Once on the business side and then on the personal side?
So your business is going to be paying what's called the payroll taxes, right? So if you are a W-2 employee, then your company pays half of your FICA taxes, and then you as an individual pay the other half. So that's going to be the taxes that your business pays, just like any other business would pay it. All the rest of the taxes, those are going to flow through to your personal income tax return. And if you're a business owner that's paying yourself on a payroll check, just like you would work in corporate America, they're going to take out the other half of the FICA taxes, which is going to be on your statement. And then if you should also have some withholdings on your W-2 as well. And so that is what's going to flow through to your personal income tax return. So
And
yes,
that's
the business will be paying this the self-employment taxes, but not the income taxes on an S corp.
yes. C corporation is not the case. The
Exactly.
corporation is paying the tax, and you as an employee is paying the tax. So often they refer to that as the double taxation. And
Yeah.
it's more expensive. So that's why I regretted making that move back in the day. This has been very helpful, Belita. I also wanted to share with you guys her services and what she's offering. Anybody have any feedback? But again, finding individuals with this skill sets and understand this space, to me, that's your first question if you're entering in government accounting. Do you understand indirect rates? If they can't answer that, then that's not the right accountant for you. Because again, as you defined earlier, you have different specialty areas as an accountant. We just group everyone in the same way I did with their lawyers. I didn't realize once I got sued, I was dealing with a labor attorney, a corporate attorney. So making sure you have those that type of support and building that as part of your teams. So I have some takeaways for the day. Anyone? I get some takeaways. Did y'all enjoy this?
I enjoyed it a lot. I feel like I had a lot of questions, but I think I need to just set up a consultation.
Hey, Paula, this is Dina. Before we,
Well, oh,
Hey.
Nikki was saying something, Dana.
hey, Paula,
I
Yes.
enjoyed it a lot. I feel like I had a lot of questions, but I think I need to just set up a consultation.
I can't hear you.
hey,
Dana?
I just wanted to say there is a question from Sheila Ray Green about DAF accounts.
What type of accounts?
Okay, I said there's a question on Facebook from Sheila Ray Green about DAF accounts. Real quick, before the takeaways, if you all can just,
I don't know anything about DAL accounts.
okay.
I've never heard of that. Yeah.
Okay.
Nikki, you were closing with something? Your takeaway?
I kind of forgot my take. Oh, I'm gonna set up a consult because I had about maybe 5 or 6 questions. And I didn't want to, I don't know. I was gonna set up a consult.
Yeah, that's a personal, because every situation is a personal situation.
Yeah. Were there any tax laws that have changed this year, like this within the last 12 months that we should be aware of? I know someone had brought up FinCEN reporting, and I don't know. I know that they said that it will be a high payment if we ignored it or whatnot. But are there any other things to kind of keep in mind so we can just stay abreast too?
And the BOI, definitely.
That's the fence. They're the same thing. People just use them interchangeably. It's the regulatory agency is FinCEN, and then BOI is the document that has to be reported on. So that's the big one for this year. It's still under litigation. If you guys scan my QR code, I do have some information in there about it. It's been extended till March, I believe it's March 12th or March 13th, but it's still under litigation right now. But as far as any other major tax changes for the year, I mean, there's so many every single year, but I can't think of any that would affect like the common person that are going to be adversely affecting you. But once again, you can always ask me about those and I'm happy to share, even if you just drop me a note in LinkedIn.
Okay. Donor advised account funds, that's what DAF she was referencing. Donor advised funds, and which is a good question. How do you write off, like for me, I do scholarships a lot, right? Am I able to write those off as a donation? And I do a lot of sponsors. What can I write off legitimately?
Yes, so it depends on how you are donating and the type of organization that you are donating to,
Mm.
whether it's going to be a regular business write-off or whether it's going to be what's called a charitable contribution, which is treated a little bit differently. So it definitely depends on the organization that you're contributing to and if you're making it or whether your business is making it.
Mm. And what would be the best? I think you've given a lot of great tips and how we should start. What's some call to action? We always want to leave people with call to actions and what they should do right now and by the end of the year. That's
Yeah.
right now we got taxes get ready to come up. Is there anything we need to be preparing for as we submit our taxes? And also understanding, I didn't even realize that the S corporations is a different tax date than your C. That's March 15th and September 15th for the extension. But is there anything we should know?
Well, I was gonna say, file your extensions if you have not. That is an easy penalty to avoid. So that's one call to action. And then the second call to action that I have for everybody is when you take your documents to your CPA or tax preparer this year, ask questions about what are my opportunities to save on taxes for this upcoming year and what are the moves that I should be making in my business to set myself up for success. And then number two, just making sure that you have a budget. I mean, number three, making sure that you have a budget set up for your business so that you know and understand what where you expect to be financially, and then measure yourself throughout the year to see if you're meeting those goals. That is like the number one thing where you see businesses start to fail when they don't plan for their revenue and expenses. And then also they're not tracking that stuff either to know if they're on track or not. And then at the end of the year, just, seeing where you ended up against that.
How important is for me to keep all these little receipts of everything that I do? Is that I hate all those little pieces of paper. If I have a calendar that documents where I participated and I've gone to a lunch, do I still need to have all these bags of paper and receipts to give to you for my taxes?
That's where the accounting system comes into play. And the key to that is really making sure that you have a business bank account set up under your business name, business tax ID, EIN, and making sure that you have a personal tax account, because that also determines how thorough you need to be with your record keeping. If the IRS can't distinguish between professional and personal or business and personal, then that's where you start needing a whole bunch of receipts. But typically one high audit area is around travel and meals and entertainment. So typically the rule there is like if you have a meal that's over $50 or $75, you want to keep the receipts for those. But if it's like a little $10, you know, you went for some fast food or something like that, you don't really need to have a receipt unless you are paying for things out of your personal account, and then that's where it gets dicey. But the best advice I can give anybody is to make sure that you have a business account set up and make sure your business expenses are coming out of that account. If you buy something personally, make sure your business reimburses you for that expense. That is more important than kind of keeping track of like all of those receipts.
And I'm a home-based business. Can I write off any of my electricity? What can I write off as a based business legitimately? I got cable and and internet, but are those legitimate expenses?
Yeah, so with the write-offs, for the office deduction is what it's called. Those are, you can pretty much write off like the portion of your home that's solely dedicated to your office space. But the limitation there is you can only write it off to the point that you have income in your business. So if your business is taking a loss that year, you can't take those itemized home office deduction expenses, but you can do what's called the simplified method, which this is the area, square footage of my office, and then you get a rate, and then that's the write-off that you can take for that. But for the home office one, typically it's not going to give you that big of a write-off. And then it gets a little bit more complicated, like once you're doing an S Corp as well, that typically is good for a disregard entity, but I typically say, I don't know if anybody's heard of the Augusta rule before, where you can rent your house out to yourself. This only works for S corporations, but you can rent your home out to yourself for up to 14 days tax-free. And that is a deduction for your business, and you do not have to pay taxes on that as you're receiving it as an individual. So once again, like the kind of generalized advice, that's, I think, what gets people into trouble with taxes. And you really need to know your individual situation to see like what are the tax opportunities that I can take advantage of for me and what's going to give me the biggest write-offs. And you can only do that by sitting down with your CPA.
Wow, that's new. And so how does that rent myself? Nobody said ever talk. Those are the insights that I'm talking about that you need to know, because the whole game is, as everyone, the 1% is doing, is minimizing your tax liability. And we just need to understand the rules of engagement. So this has been excellent, Belita. You dropped your information in the chat. Please make sure you all reach out. Again, I've hired to support me as well as support you guys. So it's all about relationship and making sure you find the right person that's managing your business money. Because everybody, you can't put them in your books. You can't do it.
Don't, yeah.
All right. Thank you guys. And make
Thank
sure you
you.
participate
Thank
in these
you.
webinars and boot camps that's coming up. All right.
Thank you for
Thank you,
attending,
Ms.
Paula.
Thank you. This was
Thank,
awesome.
thank you, Ms. Rita. Thank you.
Mm-hmm. All right. Bye-bye.
Thank